Hello guys, this is a pre-market analysis of 24th of April. So let's quickly look at what all we can expect. What are the possible scenarios for today? Before that, let's quickly see what happened yesterday. Yesterday, almost 1% fall, and that's the second session consecutive fall we have seen. And the reason is HSBC have downgraded Indian equities from neutral to underweight, and there's a second downgrade in less than a month. So that actually affected the market. That's one reason. And then the crude oil was also spiking. That was another reason. Now, if you see HSBC, the important concerns that they have highlighted is this rising crude oil price itself, and it will have a huge impact on the earnings growth. And they have made a correlation also that every 20% rise in oil price will lead to earnings fall by 2%, 1.5%. And we have seen oil price were trading at 60s and 70s also before the war. Now we have seen 120 also, and now it is settled at around 100 also. So from 60, it's almost 30, 40, 50% hike is what we have seen. So you can even 60% hike also we have seen. So you can see how it is going to affect the earnings, and definitely that can lead to inflation. And apart from that, it is affecting the economic stability. So these are the reasons which has been highlighted. And there are additional risks that they have highlighted is this expensive valuation. That is something which we are talking from 2023 onwards when they hit at all-time high, 24 onwards, 26,300 onwards. That time itself, it's hyped, it's over, expensive, and its valuations are very high. But now it is at a normal level only, and rupee depreciation is one of the big factor that is again getting highlighted, and FIA stance on Indian market is which is very cautious. So that's the reason why strong negative sentiment by HSBC upon the Indian equities. And secondary reason, I've already told that the price of crude oil was increasing during the market hours, and that's also one of the reason, and the market pressure have continued. Now coming to US market, yesterday it was highly volatile session before US market opened, and immediately you have seen a 1% fall. And then there was a reason which has been clarified that Iran is testing its air defense system, and then the market have recovered also. And then another shock came that Iran parliament speaker have resigned, and then again we have seen a big sharp fall. And then now the interpretation is shifting because of this resignation, because speaker was a hardliner and he had a strong IRGC influence. Now he is resigning means there is a possibility of negotiation, then the negotiation potential or possibility may become slightly easier. So the US market again recovered strongly, and eventually the markets have closed in green. So it was a volatile session because of this news only. And again, there are escalations which are happening. Iran is attacking the ships in Strait of Hormuz. Iran is collecting the tolls also, and Iran is seizing the vessels as well. And Trump also responded that US Navy can shoot any boat that is placing the mines. And the minesweepers are also there to clear the mines, but it is impossible. It is those who place the mines itself, they don't know. But with technology, whatsoever technology is there deep under the sea, how you're going to handle is something which is that we need to wait and see. And there are additional statement also from Trump that Iran leadership was divided, and one side want a deal and the other side doesn't want a deal. Just that he want to tell that his side is correct, because he always talk about he is being approached by Iran for a deal. So now he can say one side doesn't want, the other side want, so it's divided. So whatever he said is correct, right? In that case, because the other side is what now contradicting with Trump. So the conclusion is, see, as of now, there is no peace talks visible. Situation is escalating further. So let's see. Market may be still under pressure, but as of now, since ceasefire is there, uh, market has not yet decided where to go. So it's in a consolidation phase before another trigger. If there is a peace talk, if there is a further development on the positive side, it will rally on the upside. Otherwise, it can further trigger a down move. But the worst is over, right? Yesterday, Dow is almost close 0.4 negative. S&P 0.4 negative, and Nasdaq zero point 0.9. That is okay. Now volatility slightly increased. VIX have increased to 19.5. Oil price again increased 2 to 4%, and Brent is now trading at around 106, and WTI is 97. So anything above 100 is strong negative. Brent is above 100, so slightly negative. And GIFT Nifty is surprisingly stable. GIFT Nifty is actually positive. So if you compare it with GIFT Nifty, we may get around 50-point gap up opening. As of now, what is it indicating is gap up opening. But let's see during opening, if we are finding the pressure, it again can go down, right? So we may get a flat opening, I would say. 50-point won't consider, but GIFT Nifty is not indicating what actually the scenario. Now remember, always GIFT Nifty is not trading with that liquidity like Nifty. So when we open our market, it may be a slight gap down also. So it doesn't, so a flat opening is what you can expect, or a small gap down. Since there is a gap up there, it doesn't mean we may get a gap up also. There are liquidity related aspect also that you need to consider, right? So, because if there is a big moves like 200 point, 300 point, then we can equate it easily. But if it is this small gap up, there you see, doesn't mean that small gap up you'll get here. It can be flat, it can be small gap down also. Now, global as of now is clear negative, but GIFT Nifty is not reflecting that negativity, and that is a contradiction. So, global is going on one side and our local is going on the other side. Yesterday, it was totally reversed. Local was very negative, global was slightly positive. So, today, things have changed again. If you look at ADRs, banks, it's mixed. Infosys ADR is 4% down. And at one point, it was 7% down, which is 6-year low. Infosys, we have seen 6-year. I'm not talking about 52-week low. I'm not talking about 104-week low. I'm not talking about 156-week low, which is 3-year. I'm not even talking about 312 weeks, which is 6-year low at one point. Can you imagine? Right? 312 weeks, not 52 weeks, 6 years low. Now, Wipro also, we have seen yesterday at 4%. So IT strong negative. Global pressure is also there. Strong negative. Let's not get into the results. That's very technical. Infosys result is positive. Revenue is 3% up and profit is 28% quarter to quarter. That actually beating the estimate also. EBIT and margins are stable. Dividend 25 per share. But there are negatives also, right? So let's not get into that because then it will go too much. Now, if you look at the institutional data, FII sold almost 3,250 crore, DIIs bought for 940 crore. So FIIs are aggressively selling, that is continuing. DIIs are supporting, but that support is not enough. Market is still falling. And if you look at it, yesterday calls added 18.5%, puts added 8%. So the PCRF dropped from 1, which was neutral, flat, 2.92, which is slightly bearish. So as of now, we have a bearish positioning looking at the open interest. And if you look at the participant positioning, the retailers are 20% bullish, FIIs are 15% bearish, and prop traders are 4% bearish. So the same pattern now also, the retailers are bullish and smart money is cautious or smart money is bearish at this point of time. So see, if you look at the internal market structure, mainly you need to look at banks and auto, IT, FMCG, right? So IT, I told you clearly negative. Banks, neutral. So the banks are also slightly under pressure, you can say, right? FIA selling is there and it is a concentrated selling, especially HDFC, ICICI and all. Auto risk is there because of this petrol, diesel increase, price increase. That is why IT auto is in trouble. IT have already fallen 30 to 50% and 6-year low in case of Infosys, something which, and if you talk about FMCG for last 2 years, it is weak. Long term, it is weak. So these main sectors, our market is driven by banks, auto, IT, FMCG. These four are completely weak. So only if these started showing some recovery, our market will give a rally now. Only pharma is showing strength because that is something which is related to medicine. That will have that strength at any point of time because it's essential, right? It is not going to, whether the war is there or not, if you need a medicine, you need to have a medicine. So if war is not going to affect, or it is not like that. If war is there, it will only add more profit to these pharma companies. If COVID is there, it is not going to affect every sector will be affected. It is not going to affect the pharma. It will only add more profit to that sector. In normal scenario, pharma will do normal. In worst scenario, pharma will do better. So chance of it is going down is very, very unlikely, except in case of some Trump tariff, export related companies like that. Okay. So total internal structure is weak. Keep watch on the market, the news. Inflation is rising. Auto sector is under pressure. IT is under deep pressure. Banks are also not that stable. So keeping all these in mind, you know, uh, trade responsibly, trade carefully. I think in April we have 3 more sessions left, and 24,500 straddle is very much active. So 24,500 is going to be a strong resistance, and many traders, in fact, shifted from 24,500 to 24,200 also, which means 24,200 can also be a potentially good resistance. So the range that we are looking for is 24,000 to 24,500 as of now. But if there is a trigger, if they break 24,000, we can extend that to 23,500 as well. But this expiry, we are looking for 24 to 24,500, right? So always keep a buffer of around 2% from the spot, which is around 500 points. So technically, yesterday that we have already discussed, a gap down of 180 points and closed at around 24,170. Bearish candle, long upper shadow, which means a strong selling, which is coming from the top. So the structure is now looking slightly weak, long upper shadow, right? It's a bearish candle. Important resistance level is at 24,500. Support is at 24,000, right? 23,900 after that. Bank Nifty, important resistance is around 56,650, 56,750 level. Support 55,900, 55,800 level. If you see these levels are breaking, that's where the sellers are getting panic, and you need to capture that gamma blast on the opposite side. So if you look at the options data, maximum, as I told you, 24,500, good amount of straddle writing is there. Shifted to 24,200 also. And if you look at the put side, it is at 24,000. So the range that we are looking for is 24 to 24,500 actually. So global is negative, oil is above 100, major concern, IT is under heavy pressure, FIIs are continuously selling, all these are there, but the market is still holding the range. Market just needs one trigger that it can fall steeply. Okay, so it could be range bound, and the highly volatile phase is what you can expect. So be very responsible and trade carefully. Place your stop loss in the system itself, not in your mind, right? Because sometimes brain fade or fog can happen. Okay. So if you would like to trade with us, you can join our live market mentoring sessions. You can trade with us. See you there.